Hello and welcome to Questioning the Manager. This week we have John Bennett, Fund Manager of Henderson European Focus Trust. This focuses on the European market. It is all caps, it invests in all sizes of companies, and it's style agnostic, which means it invests in growth companies or value companies, depending on John's view of the market. John, welcome to Questioning the Manager. John, there's a lot of discussion about what's going to drive markets in 2017. There's talk of earnings growth, whether that's going to come through, whether we're going to see more fiscal stimulus, whether the central bank, the European Central Bank, are going to start tapering QE, or whether the elections that are upcoming are going to cause a lot of upsets. So what's important in your view?
All of the above. I do think earnings growth will be important this year. I do think that we will have a year where some sectors that have hitherto been complete strangers to earnings upgrades will start to get earnings upgrades. And within that, what I'm really meaning is that I think that we're moving globally from a growth to a value market. And I think that move has actually been underway for some time now, since 2016. So if I'm right that we're moving from a growth to a value market, that favours Europe. It also favours Japan, in my view. But that favours Europe, and it favours the kind of stocks and the kind of sectors that investors have found very, very easy to avoid for much of the last decade, not least financials.
Okay, so is this view driving the construction of your portfolio?
We have done. I mean, we tend not to lurch. You know, we're not sort of all one side of the boat and then we scramble to get to the other side of the boat. We tend to sort of try and be a bit more gradual and incremental, and we move that way. So we started, and in all of our presentations to investors, we brought in this phrase tilt to value, but we actually brought that in back end of 15. So we started already the tilt towards so-called value stocks back then. We did accelerate that in the back end of 2016, and that acceleration was writ large by the move into banks. And we found it, like many investors, we found it very easy to dislike banks for most of the last decade. Unlike many investors, we no longer dislike banks. That's clearly the biggest change right across our portfolios.
Okay, you've mentioned banks there. There's certainly expectation of rising profitability in this sector on the back of rising interest margins. So are you purchasing a lot of positions within this sector?
Yes. I mean, as I've said about any investment, whether it's a sector or a stock, no investment case, in my view, is made up of one ingredient. There's a number of ingredients that go into an investment case. In my view, you don't wait until all the ingredients are in front of you. Or I've even put it, you know, using an analogy, you can't wait for 5 green lights to come on before you go. You often go between numbers 2 and 3. And we saw a number of ingredients come in that made, for us, banks a bit more compelling. Possibly not as a long-term investment, but we felt that the lows were in. Now, the number one ingredient for us was you had to have a view on bond yields. And that view for us was interest rates have stopped falling. The long end of the bond yield curve has stopped going down. Yields have stopped falling. My goodness, I hope so, because so much of long bonds were in negative yielding territory. This is extraordinary. This is exceptional. And we were looking for catalysts for the extraordinary, for the exceptional, to mean revert to something more ordinary. In other words, a normalized yield curve. That is the number one ingredient we felt that was needed for you to become remotely interested in European banks. We took the view going into the second half of 2016 that was likely to happen, and that has happened.
Okay, finally, the UK is an area in which the Trust can invest. So post our referendum result, have you made any Brexit-related trades?
No Brexit-related trades. And I've got to be damn honest, too slow. And maybe because this is largely a Europe ex-UK trust, the UK tends to be a wee bit, in this trust, a bit of an afterthought for me. So Hindsight Asset Management is, of course, the most successful asset management company on the planet. And with hindsight, I wish I'd done some Brexit trades, but I'm not losing too much sleep over it.
John Bennett, thank you.